And I know you often have a very bullish tilt, but still, I have to ask if you're surprised that the markets closed near session highs here going into a weekend where we have a Russian invasion of Ukraine. So much could potentially happen, but investors don't seem worried. Should they be?
Well, I think yesterday we had a lot of worries at the beginning of the day. But then when we found out what the sanctions were going to be and that they weren't likely to lead to an economic impact on the rest of the world and on Europe, the United States, I mean, clearly, if we had adopted some very, very serious, significant sanctions, the Russians might have responded in some ways. But the sanctions would have shut off oil and gas to Europe, causing a recession there. That was kind of the worst case scenario that people were thinking about in terms of where this thing could go next, and that just didn't happen. So the prospect is that we'll get somewhat higher inflation as a result of the backup in oil prices and gasoline prices going higher. But we're still going to get an economic growth continuing, and earnings will continue to grow. And the reality is corporations and consumers are still have ample liquidity. And that's why I'm really not surprised with the ability of this market to make a comeback here, because there is so much cash on the sidelines.
Does the Fed have a difficult job here trying to temper down inflation without extinguishing growth? Are its tools too blunt to have the precise effect that it needs to have here, particularly as we're looking at this first of maybe many rate hikes?
Right. Well, I think that's the question for the rest of the year, really, in many ways, is what is the Fed going to do about inflation? The reality is that there isn't much they can do other than raise interest rates. And it's not clear that raising interest rates will do very much about the inflation problem we have. The Fed officials have, for the past couple of years, said, don't worry about inflation. We have tools in our toolkit to deal with inflation. And I keep scratching my head and said, tools? The only tool they have is to raise interest rates to the level that causes a recession, just the way Volcker had to deal with inflation by creating a credit crunch that caused the recession that brought inflation down. So I think the Fed is not going to go that route. I think they're going to be very gradual. I think if they're lucky, and they're counting on some luck here, that inflation will moderate. They're not using the word transitory anymore, but I think that's their hope, is that some of the inflation will moderate. And I think it could on consumer durables, but rent inflation is going to go higher.